I just returned from a trip to Washington, D.C. Governor Gregiore asked me to join her to represent the community banking industry because, as she knows, community banks were not the source of this current economic downturn. The purpose of the trip was to meet with our Washington State congressional delegation and key Obama advisors to talk about issues which are critical to Washington State businesses. Our elected officials are grappling with so many issues right now, from reform of the financial services industry to energy efficiency to U.S. trade agreements and overall business competitiveness abroad. The Obama administration claims that they're interested in partnering with businesses in order to solve some of these very challenging problems. Thus, Governor Gregiore asked 9 business leaders, which represented a broad spectrum of businesses key to our state's economic recovery, to join her in discussion with our congressional delegation and several of the Obama key senior advisors and cabinet members. You know, we were able to share real-world examples of issues that businesses are dealing with. For example, protection of intellectual property and patents is an issue that concerns our local businesses that are exporting products to countries like China. They travel to China and find exact knockoffs of the products they are trying to sell to that country, as well as selling in the broad Asian market. Treasury Secretary Locke shared the strategy that his administration is taking, which included focusing efforts on the local level in China. We also met with Ambassador Ron Kirk, and he said that the administration is focused on job recoveries. And he implied that small businesses are critical to getting those jobs growing again. And the interesting thing is that it was a perfect segue into my discussions about the importance of community banks. For instance, community banks provide 50% of the loans $100,000 and less to small businesses, and they provide 31% of the loans $1 million or less to small businesses. My customers are frequently telling me stories about the important role that we have played in supporting them through this economic crisis. My main message to the Obama team was that you can speed the recovery of the economy by supporting legislation that enables community banks to do their job, providing loans to small businesses in our community and to families that are purchasing homes and want to send their kids to college. Reform of the broad financial services industry, including non-bank competitors, is necessary and prudent. And some really good legislation is coming out of Congress. But care needs to be taken to ensure that community banks can continue to operate efficiently. And frankly, I do have some concerns that some of the proposals could put us at a disadvantage. A good example is the proposed Consumer Financial Protection Agency, the CFPA. Community banks are already effectively regulated to protect consumer interests through their existing bank regulators. I have a full staff of compliance officers on my payroll today. They're executing the proposals that are coming from the regulators to further protect consumers. And I don't know how they could possibly keep up with directions from a second agency. What are they supposed to do if the agency mandates conflict with each other? The focus of any proposed new consumer protection agency should really be on the unregulated non-bank financial firms that engaged in predatory lending practices and the largest banks that are too big to fail and therefore threaten to destabilize the economy. I'm concerned also about Senator Dodd's proposal for a single super regulator. I support multiple regulators like we have today. Baker Boyer is a nationally chartered bank under the Office of the Comptroller of the Currency, the OCC, so I want to know that the OCC is motivated to keep community banks healthy. If they lose sight of this, then I want the option to move to a regulator that supports our community banking model. Finally, I encourage the Obama senior advisors to extend the deadline of the SBA, that's the Small Business Association, program enhancements, which were reduced loan fees and increased guarantees offered in the spring of 2009. Before this financial crisis hit, nearly 60% of all SBA loans were concentrated in just 10 banks. I shared with them that if they're concerned with supplying small businesses with a steady source of capital, the SBA needs to do a better job of embracing the more than 8,000 community banks nationwide so that all lenders can easily participate and get the needed loans to small businesses. Bottom line, small businesses are a key to our economic recovery. They need to be able to grow and expand their operations, and community banks are an important partner in making that happen. This trip ended up to be extremely worthwhile. The governor asked all of us that were attending what our key measure of success would be. I shared with her that my measure of success would be that a robust discussion of the issues that are facing the financial industry. I wanted to improve my understanding of the options that are being proposed by Congress, the administration, and the Federal Reserve, and that the administration and our Washington state elected officials are supporting a solution that maintains a healthy community banking system. The trip actually exceeded my expectations, and I am happy to report that there is strong support for community banks, both within our Washington state delegation as well as the Obama administration.